So, good morning, traders. How are you guys? How are you feeling today? So just a little bit posting in the Telegram channel so that everybody understand that this is the link. Use this link to So, morning Natisfy. Hello Earphone. Good morning guys. So, how was your trading week so far? Basically, the last 2 weeks were not that good. So far so good. And how's you? Yeah, actually, the Monday I didn't get in any trade because of Monday were no banks in this game, and actually I don't know how my strategy really works if the banks are not there, but simply the liquidity was not even provided for some movement. So yeah, the thing is, it resulted then the next day with big manipulations, and I tried to follow the overall trend, and this is why I was scalping a little bit, but at the end it still was negative because of I took a long on GU and long on Euro USD. But yeah, that's just part of this business. Sometimes you will lose, sometimes you will win. And just need to adapt everything the next day. So, that's good. What did you trade? Because you wrote down that your trading week was good so far. So, any nice trades that you took? Hey, I mean, gold dropped crazy yesterday. That was crazy, yeah. That was big manipulation. I mean, I think I even explained that we had that thing over here, that bearish continuation pattern in the market. Then yeah, it dropped massively from that point to the low. Yeah, about how many pips are those? Over 300 pips. Yeah, that's good. That was nice. Hello Parza, hello my friend. Yeah, well, basically that was the thing, because the DXY was strong. Okay, so it rejected a little bit more to the upside, exactly again from the 90 level. Yeah, it's not a big deal. Again a gap, I guess. Yeah, but we already filled in that gap, so it's not a problem. Yeah, I'm super curious currently. Overall, we should continue with our trend. So basically, every single dollar pairs is currently at that level where we wanted to see. So I spoke about that scenario over and over again, but yet yesterday for me the whole situation looked a little bit different. Okay, this is why I took a long on GU. I was also planning a short setup, but it didn't play out. Unfortunately, it went to the downside without me. No trades done since Monday. I'm glad, because see, I would have good opposite direction GBPUSD and EURUSD. Okay, that's good. That's good. Okay, guys, then I would say let's start again with the analysis. Here in the DXY, just a quick reminder, everything is here set up like my analysis. So I got here my monthly resistance, I got my monthly supply. Here I got my 90 level, which is institutional level. Yeah, that's also a thing which I would like to talk to you about how big banks really trade. Okay, this is something which I think most of you don't know. Okay, this is something which, yeah, also me took a little bit of time to discover that one thing. So how really the banks are trading, and there are a lot of variation out there of banks, and everybody's trading a little bit different. So waiting for gold buy entry, can you confirm where I can buy? Yeah, also me, I'm looking for a buying opportunity on gold, but like I already explained to you, for gold we could still go a little bit lower. So let's see. I will definitely give you right now an update. This is why I'm currently looking on the DXY, because if the DXY right now looks that it's ready to drop down, then we will have free money for gold, euro, USD, and GBPUSD. So this is what I'm currently looking on the gold. So I would like right now to analyze a little bit the DXY, talking then a little bit about gold. Then I would like to cover the one topic with the banks, okay? Because this will then you will completely understand why this strong level of 90 is that a strong one, okay? So we are here at the demand area. We already tested that broken trend line, which is great. So the correction is here, moving to the downside. Currently from here again, a small movement to the upside. And afterwards, right now, we should expect that the market should drop lower. So we would like to see right now the market dropping till that level, okay? Let's see how it will develop, because it looks like maybe we will do something like this before we will really go crazy to the downside. But what I do expect is definitely that the market will give us strong impulse correction, impulse waves correction, then again another impulse, and after we're going to hit this level over here, so I'm talking about this structure level that we got here, I expect that the market then will go for a deeper correction, so kind of like an ABC correction, okay, to test that level more into the depth, so giving us here a brighter correction before afterwards starting again those strong impulses to the downside. So for me, this scenario looks currently the one that I do expect the most. Let's see if it will really occur like that. But that means for us that we're going to go definitely long on every dollar pair. And look here, the weekly is perfectly still in the correction. Look at the weekly candle. It reacted pretty hardly to this level. There's still a little bit of liquidity located. Boom, move to the upside. But what I do expect is that this week should close bearish, and if we're going to break through this trend line with a closing perspective on the weekly, then we can really expect that the DXY will just keep dropping, okay? That will be then the last confirmation. On the daily, you can view this whole thing a little bit different. I'm going to change right now to this chart, and let's see what we can map out over here. So for me, it looks more like this, that we already broke out on the daily and that we're already testing that level. And like I told you, we got here that supply area where I was looking for two scenarios. Scenario number one, that we're going to go to the downside from that level, or that we're going to test the liquidity area before dropping to the downside. And right now it really looks like the market will go up a little bit higher to test that level before dropping. But also what I like to do in this case is to just map out the impulse to the downside. And as you can see, we're currently at the 0.382. And we could go still till the 0.5 or maybe till the 0.618 for the last grip liquidity over here, and then drop to the downside. 4 hour has given us over here a W formation. That means we would like to see right now from this area, somewhere in this area, we would like to see a small correction before the market will then continue to move up higher. That's currently the point. However, the market here created a new low. And from here it went all the way to the upside, which is telling us that that was a fake breakout, and that is our original support. So that was just a liquidity dive in this case, okay, just to hunt the stop losses. And then from here the market created almost an equal high. And right now, if you would like to see the continuation to the upside, in the first place you would like to see a correction based on this impulse. So how far can we expect that? Yeah, at least till this one over here, till the 0.382 or even lower. And then afterwards, extreme movement to the upside, and then the overall correction. But still, it could also just respect the area completely, and we're going to go lower to break that one. That could be also still the option, but let's see what will happen. And this will then decide definitely the future on EURUSD and GBPUSD and gold, of course. So, hello my friend, hello Sava, how are you? I'm great, bro, I'm great. Hopefully you're great as well. Morning guys. Hello Chris. Yeah, good night EURUSD will do, of course. We got a nice double bottom setup on the hourly to fall hard. Which pair do you talk about? Always, guys, if you write down something over here and you would like to share some patterns or some confirmations, always write your pairs over there, because we may be a little bit confused, because sometimes I'm talking about the EURUSD, for example, and then somebody's writing down, okay, we got a double bottom, but maybe not everybody will understand that. So always write down DXY. Okay. Yeah, basically. Well, basically, I don't use double bottom and double tops. I always just use M and W formation, and there's a reason why I'm doing this, because a double bottom will not occur that much, and you don't have that good of an accuracy when you trade double bottoms and double tops. And there are a lot of variations out there how you can do it, but what I use is a W, the M, but also the head and shoulders, because those patterns are super in the movement of the liquidity. They are always in the move of the liquidity and in perfect alignment with the fib retracements, perfect alignment with the manipulation that the hedge funds are giving us, and so on. This is why it's super crazy pattern. Yeah, well, let's do a little bit gold right now. So the DXY, like I told you, I don't know right now what will happen. I just shared with you the analysis that I've seen, so the possibilities, but let's see what will really happen. Right now, very important for us is the gold analysis, because the gold is currently testing our support over here, which we already identified the last couple of analysis. Here we got our impulse and the 0.5. Okay, then you can map out this resistance over here, and you can see that gold is trapped between the monthly support, monthly resistance, but you know from the overall structure that it should go up. Okay, so from my point of view, I really do not expect that gold will drop right now to the downside like this. Of course, it is a possibility, don't get me wrong, but I do expect more than likely that the market will push up higher, going up like this, okay, to complete this overall trend, because we could still have the opportunity currently that the market will go down till the -618, till the 0.618. Of course, it's a possibility. Right now, we got some more confluences over here. We got here a strong institutional level, which is the 1,800 level. Let me do it right now more precisely, giving you the exact coordinates. Sorry. That's important, because that level will be the level where the institutions will take their trades. Okay? And this is what I would like to explain to you in today's live stream from my educational part, that institution, they do not trade chart technical perspectives like we. Okay? We traders, we're looking for support resistance flips, we're looking for supply demands, and so on, okay, to get our entries, okay, and so on. We look for the resistance over here, for the potential drop to the downside, or from here to go for long, something like this. This is how retail traders, so we are all retail traders, of course, we don't have the liquidity that we should trade otherwise. It's not possible. We cannot trade like the big banks, because if we would like to trade like the big banks, then we need much more liquidity. Okay, and in this Forex market, guys, got here that cake. That's the Forex market. You got most of the traders over here. So this is the whole cake. You will have here, in this case, you will have retail traders. That's us, retail traders. You will have some companies, okay, which also affect the forex market, the companies. And then you got here the banks and hedge funds and financial institutions, okay? So they have the most liquidity. But the thing is that from those people over here, from those big banks, there are only four banks, or up to 7. I don't know right now how much there really are. 4 to 7 banks who have the most money. Okay, they have so much money that they don't need chart technical analysis. They're just buying a market whenever they want, or they're selling a market whenever they want. Okay, that's the thing. We as retail trader, we need to follow the movements of those players. Okay, we need to understand if they are bullish or if they are bearish on a market. And what we can clearly see, for example, is that those big players, they are absolutely bearish on the DXY, for example. Okay, they sold that thing over here. They sold crazy the dollar index. Why? Because of they got the fundamentals on their side. So they are doing those fundamentals decisions. They are looking on the economics, and they just try to take profit out of the current situation that the world is giving us, like it was with Corona. Okay, they are just very greedy, and they are just taking advantage currently because of the coronavirus. This is why they are shorting the DXY, and they make right now much money. Okay. And what then hedge funds are doing, they are always looking to capitalize on the manipulation movements that they are providing us. So for example, if you got here the resistance, like I told you, I think yesterday, the market is here. Retail traders are going to go for a short. And what will happen is that the market will then pump up. Then at this area, retail traders will go up because it is a support resistance flip. And what will happen is that the market will then drop to the downside. Then again, sellers will join the market, then it will go up like this, again stop loss hit, and then the market will drop down, and you will have over here huge manipulation during this area, and so many retail traders will lose their money. And this is what hedge funds are doing. Okay, hedge funds or financial institutions who don't have that much money, but still they have millions. Okay, but there are 4 to 7 banks out there which don't need to take profit out of stuff like this. They're just buying it. That's it. They're just buying. Okay, and where are they going to buy? That's super easy. They're buying the market at the 1,800, for example. If they will not have enough liquidity that the price will go up from that level, okay, if there are still too many hedge funds and so on sells, they will put the next order at 1,700. Next order at 1,600. But that thing will never pass their analysis. So that means they started buying it from here. Okay, at this level, they bought gold the first time. Okay, that is the level of demand. That's the monthly demand. Is always occurs always because of big banks are buying it. So this is an institutional demand in this case. Okay, they are buying it from here, and you can clearly see over here how this market tested that level. That means they started buying it from here. Okay. And then with this movement to the downside, there was a huge trap, so that they were collecting the liquidity. They collected with this movement to the downside the liquidity from the other financial institutions who have much money. Okay, they were collecting their liquidity, and then from here, boom, strong move to the upside. This is how they trade. Okay, look at this. This is the real movements in the market. Okay, from 1,450 to 2,075, something like this. Okay, And what they like to do is that they are placing the trades at round numbers, okay, sometimes or 1,650 or stuff like this. They do not care about that if the market will then really just respect that area immediately. Okay, you will never see like this. This is exactly here. They bought a market over here, and this is why the market gave us that huge reaction to the upside. And right now what they're doing is they're testing the level again, because with this movement to the downside, they're currently collecting the liquidity. Okay, this is how they collect currently the liquidity for gold, so that they can push the movement to the upside. And this is why I do not believe that we're going to go down lower on gold, because that looks, from my point of view, as an institutional level of demand, as a big bank level of demand. This is why I'm currently very interested in buying the gold, okay? And whenever gold is going to be bullish, you have a high chance that also the EURUSD and the GBPUSD will be bullish, okay? However, we still got a little bit of room to the downside, okay? I think you understand this concept, because this concept is super powerful in order for you to understand what the overall direction is, okay? In this case, if you are a retail trader, you cannot make much money. Of course not. Why? I mean, you could open that position and you can be a swing trader, but you will need to it will take you so much time, okay? And I don't know right now what money you will make, because you need to still follow your risk management. Maybe you're going to use a $1,000 account going buy from here till the next level, which is going to be the 3,000K. That's going to be the next level for gold. Yeah, I mean, you can hold it, but maybe it will take you some years, and that's not how then trading will give you the best opportunities out there. You need to try to catch every single movement, and the bigger you are, okay, the bigger account you have, the less trading you need to do. This is exactly like the big banks over here. They don't need to trade that much. They entered buys here, they closed buys here, they entered buys here, and right now they try to add again some positions during those movement to the downside, and they took shorts over here so that they could bring the price to the downside to grab that liquidity, okay, to illustrate us, okay, this market will move crazy to the downside, okay? This is the illustration right now what they are going to do. So nobody knows that this market will really go that much to the downside, but I told you that we need to go to the downside in the first place because we got that level of demand. Plus, in addition, because we got so many confirmation that the market is still in that bearish trend. But if we're going to remain above this level, then we got clean bias for longs, okay? And the bigger you are, guys, from a trading perspective, the less you need to trade, okay? You don't need to trade then every single movement in this market like I'm doing it right now. I like trading, okay? I really enjoy this. This is how my strategy works. But when you are a big player, you can then just simply go short over here and put your take profit over here, and you would make millions of millions, okay? That's the game. That's the game. And we need, as retail trader, to adjust the game that we can take profit out of it. Because where is my cake? Because from all those participants, okay, I don't know right now really how much retail traders are in this game, but I think something like this are retail traders. From so many retail traders, how many do you think are profitable? So how many retail traders are profitable from all retail traders of this world? Those are the retail traders. And only that amount over here. Okay, that's a little bit too aggressive. Something like this are only profitable of all the retail traders. So very small amount of retail traders are profitable. So between 5 to 10% are profitable. Okay, so I'm not talking about 5 to 10% are making very good money. They are profitable. Okay, good money. So over the next years. Okay, so for 5 years, for example, that they are profitable. Okay, only that amount are successful in this market. Okay, and only 1% will make good money, so really good money. Okay, so they are millionaires because they really know how to use that, and then they're going to become bigger and bigger, and maybe they're going to create an institution or something like this, and they're going to shift to this part of the Forex market. Okay, then guys, let's continue with gold analysis. So that was right now just to explain you how the institutions really trade. So the big one, the other ones are using manipulation. This is why this Forex market is so damn manipulated. But if you understand really chart technicals, then you will understand everything, because with the chart technical analysis, we would like to follow the big banks. Okay, we need to follow their movements. Okay, and from here, guys, here we got a big order. Exactly here we got a big order. Right now we're facing that order again, and what we do expect from here is that the market should go up. Okay, let's go to the daily. What we can see over here on the daily is that the market is currently at the daily level of demand. Let's switch just to this chart, because here we already identified it pretty clear. I'm going to delete right now this whole thing because we don't need it anymore. So that head and shoulders pattern was super powerful because it's brought the market crazy to the downside. And yeah, here we had also bearish flag, a bearish triangle. And look at this. From my point of view, that is an A correction, B correction. Currently we are in the C correction, and what I would like to see is that the market, yeah, will grab the liquidity that is located from this level, and from here the market will just go crazy to the upside. Let's see if we will go right now based on this last impulse that we got. So we got here a clean M formation. If the market from here will go up like this, and look here, at the moment when the market hit at that level over here, it went immediately crazy to the upside. Okay, immediately crazy to the upside, because that was so much liquidity, and it was also over here to fake out again buyers. And what happened? The market, boom, dropped again crazy to the downside. And currently you have here a strong level of demand from the daily, and here you also got from the 4 hours something. Okay, so I really enjoyed this level right now, more interesting in this level. Let me map it up blue for you. Okay, that would have been, for example, one entry possibility, but we could go easily lower in this case, something like this, before the market will spike up. Okay, something like this is what I do expect most of the times when you are at such a strong level of liquidity. So right now, if you're going here long, you will play a little bit with fire, okay, because you don't know which level will be that one that will hold. Now, if you can hold over 400 pips stop loss, because you don't matter if the market will go down lower, then that's not a problem for you. Okay, that's really not a problem for you. But what I suggest is to try an arrow over here for several times, and maybe you will need to take about 5 trades before the next one will be successful. And if you will catch a successful trade, man, then hold it to the upside, because you will have the best entry possibility within this area currently. Now, right now, I don't really know if we need to break this low. So actually we don't need it. It's not impossible, but it is not a must-have in this case. So what I would like to see in this case are 2 scenarios based on this demand. This one is right now a little bit of a supply area, but it's not that interesting for us. For us, more interesting would be right now the reaction till this last impulse lag. Now, what I would like to see from gold is that from here, we will definitely get a movement to the upside, to one of those FIB levels that we got over here. Afterwards, the market should give us at least a correction. And then from here, you got 2 options. Option number 1 would be from here that the market will go crazy to the upside. Okay. Or it will go lower to grab the liquidity which is located in this area, and then smashing all the way to the upside, but still also possible till this level. So those are kind of 3 scenarios. How should you right now really decide your trading decision? Well, basically, look here for your price action confirmation. Look here if this movement even will be created, because if this movement to the upside will be created, we got a high chance to reverse over here, but still we got the chance to go lower. So just do whatever you want. You could go open a buy and a sell position at the same time, put your stop loss, and then let's see which one will play out. That's it. You will be in profit if you will take a buy or a sell here, but you need to know how to take a buy or sell over here, so to not get trapped in both directions. Okay, that's definitely the point. So decide it by yourself how you will do it. I will definitely update here the inner circle group, because also me, I'm super interesting right now to get a nice long on the gold chart, and I will definitely make a signal for that for the inner circle. So I would like to do from this place a swing trade. This is for me right now. I'm not a swing trader, as you know, but when I got opportunities like this where I expect that the market from here will go long term to 3,000, then I'm really curious about this opportunity, and I will open over here a huge amount of positions from a long-term perspective as well. So over here, what you can do is to open another extra account where you will only buy gold. Okay, buy and hold gold account. That's definitely not a bad idea. I will do this today. Today I will open a new account, putting only a gold positions. Maybe I will also do over here a copy trading. So for all those who would like to join, I'm not 100% sure if I will do this, but definitely I'm interested in a big buying opportunity from gold and to hold it long term, okay? And to always buy at the correction, to add positions and to compound this account. I promise you, over here you got right now the chance on gold to make out of 1k to make 100k. That's not difficult right now. The only problem will be in this case to not get trapped. Okay, in this case, what I would like to do is to buy over here, to buy over here, and to buy over here. But the liquidity needs to be given that we are not going to lose the whole account when the price will go down to that level. And this is how you need to plan your risk management. In this case, I will risk much more percentage risk per position than average. Why? Because will use only one account only to trade this stuff over here. So I'm super curious. This is going to be one of the best opportunities, and I was just looking for it to come true, and it took a long time. Look over here, since August, since summer, I'm still waiting for this opportunity, and right now we're approaching to get the best buying opportunity for gold that we ever had in the history. For now, it's really the best opportunity. It's the one with the most confirmations from my point of view. So let's see how it will work out. Yeah, so like I told you, those scenarios you have currently, and everybody needs to decide by themselves how they will do it. Okay, then let's see some chat comments over here, so I can see US oil, please. Yeah, I will do it. Sorry, meant double top. Yeah, that's something which I also figured out. A double top. It looks like a double top from my point of view in the DXY. Yes. Good news from UK. That's good. That's good. Now that DXY is going up a little, check GBPUSD, please. Yeah, also GBPUSD I will immediately analyze. Good morning. Good morning, Matthias. Parza, can you do a breakdown on CHF GPY? Is it on short sell? Yeah, we'll do it. I saw on TradingView right now, it's spiked very high on a daily and looking for shorts with confirmation. Yeah, let's do every single pair that was requested over here. I would like to start then, as I will continue right now with the EURUSD. I think it was the next one that I seen on the chats. Yeah, EURUSD, then US oil, and then I will do GBPUSD. So look at this. The EURUSD is also going in our favor, like I was explaining to you in my live streams. However, also me, I thought during this movement over here that the market will go up. So I had confirmations to do my strategy that the market could eventually go up from here. And if not, then it will go more to the downside. Right now, we also broke this level of support over here, which is great. That means the market is approaching my next setup, so to buy it from this level over here and to rock it then all the way to the upside. Okay, this whole thing over here also looks like an ABC correction to me. Okay, something like this. But let's see if it will really develop like this. So what I've seen over here was something like this. So from here, let me do this. That was my A correction, that was my B correction, and currently this is my C correction. And I'm currently very interested in buying the Euro USD, and I think that it will hold during the demand level we got here and low level, which we don't need to pass. So if we will pass the level, then maybe the Euro USD will go for a deeper correction, but this is something which I do not expect because of the DXY also breaks out of the triangle and so on, and it is about to go very, very bearish. And that means right now this level of demand is similar to the level of supply that we got on the DXY, and this is why we got a good chance that we're going to go on the Euro USD a little bit lower before going for a very nice longing opportunity. Okay, I would like also to go from a clean chart in this case just to check it out what we can see from the higher time frames. So on the monthly, I already told you that I do expect the market to give us the retracement till the 0.5, and that means right now we tested it and the market is ready from here to go to the upside. So this is what we would like to see currently, and the market should not go right now lower to the downside, so definitely not lower. This is what I do expect currently. Okay, we have enough retracement. The market from here should just follow this impulse followed by correction, and again the next impulse, which will bring us here to the next structural level. Where is going to be the next structural level? I got this one over here. That's going to be the next target. Of course the market will then get a quick reaction to this resistance maybe, but what I do expect is overall that the market will go impulsive over here, and then here we will have enough liquidity again for the market to drop down, and then from here to push up higher again, heading this level. And at the moment when we're going to hit this level, you have here a major W formation. You got also, like I told you already, that trendline break over here. Okay, that trendline break retest, and this whole market right now will then change completely from a previous bearish market. So that was the bearish market previously, will turn completely to a bullish one. And what I mean by that is this trend line over here will be developed, and that one over here, and it will then just keep pushing to the upside a little bit. And we got then more confirmations if this setup will came true. Why? Because you got here this major W then afterwards. Okay, so it failed overall on the whole chart, as you can see, to go lower than this level, and that means from here you can expect a huge reversal. And at the moment when the market will hit this level, you will have a quick sell-off to hit this one, and then from here going up higher again, something like this. Okay, this is what I do expect from the Euro USD from the long-term perspective, and we will definitely hit this level again. Okay, this is going to be the next targets for the Euro USD. So in the first place, the 1.40, and then the 1.60 even. Okay, because whenever a market started a strong move from one level, which was this one, this is a strong level of supply. Okay, here the big banks started their shorts, and exactly over here they closed their shorts. Okay, and right now what they would like to see is that the market will go back to their orders exactly over here. Okay, everything what is pushing from one level to the downside will always come back to it again every single time. This is the pattern that's repeating over and over again. You had it over here. The market from here started this movement to the downside, and the market came all the way back. Okay, that's going to be the case. So then let's check right now the lower time frames. Let's see what the lower time frames are showing us. Well, on the weekly, we perfectly tested the previous level of resistance, which is right now turned to support. It also hit it over here, the level of daily demand. And if we're going to take our Fib level based on this last impulse, you can see that the market from the weekly perspective hit it the 0.618, which is perfect in alignment with everything, because you got previous level of resistance here, and this is right now new level of support. So we expect from this level the overall bullish continuation to the upside. From the daily perspective, this whole thing right now looks super bearish. Why? Because the market has approached this level of supply. this is not a problem. This is super nice that we're going to go right now to the downside, because previously we went from this level of the demand to the upside. We had over here an M formation, so bearish pattern, and then the market, as you can see, faked out yesterday to grab all the stop losses from everybody who's take a short, and also from those who took a buy with this movement to the downside. And right now, what you do expect is that the market will test exactly this level of support over here before afterwards going crazy to the upside, okay? Now you can also take right now the Fib retracement based on this movement over here, and you can see that we are already about to hit the 0.5. That's going to be the take profit for shorts, and then from here the market will then go crazy to the upside. Also explained to you in the last live stream or in the YouTube video that I would like to see the market filling in this wick. Unfortunately, it went up higher before doing this, which is not a problem. That was in this case only a grab of liquidity, just a trap, okay? Then the market from here should right now follow the overall trend. The 4 hours is good, creating those currently breaking this low, going lower. Previously went higher, so that was the fake move. That was in this case just a manipulative movement to the upside, and we're still actually at the resistance. We should consider this whole thing over here as double top, something like this, and the market should go right now lower, specifically to test the 0.5 based on this impulse before going up higher. So this is a strong level of structure. Everything is confirmed, so that's a strong level. But what we got also is a strong level of demand at the 0.618. So let's see which one will be the best one, which will bring the price afterwards to the upside. Let's see, this one or this one. So currently, I still expect that the EUR/USD will drop a little bit more to the downside before it will then go crazy bullish, okay? And what I mean by crazy bullish, you can see it over here. We finished an overall ABC correction, so that ABC, then here you are in the wave number 1, okay, something like this. And then here you got again an ABC correction, and from here right now to expect the next impulse. So this is right now the corrective movement 2, wave 2, and from here you would like to see the market giving you the next impulse, and this next impulse leg will bring us definitely around this level, or maybe straight to this level, okay? So I don't expect afterwards during this movement to the downside. The best thing is always to look for buying opportunity, okay? So you will miss out if you will not look to buy it around this area. You will miss out this strong movement to the upside. Yeah, that's basically it right now for the EUR/USD, and I will right now straight go to the GBPUSD trade, and then I will do US oil, okay? So here on the GBPUSD, what I do expect is that the market will go up a little bit higher, okay? Specifically till the 1.40 level, which is going to be the -618, which will be a strong level of resistance. So let's map out the 1.40 level. Now, this 1.40 level is a very important level. Why? Because it's exactly at monthly area of supply. As you can see, we already tapped into that level a little bit, but what I do expect is that we're going to test the 1.40. Okay, I expect that we're going to test the 1.40, and then the market will give us finally a strong movement to the downside. Specifically, we will see a strong movement till this level of previous resistance now turns support, and then afterwards I do expect that the market will go up crazy higher from the long-term perspective. So you will see that the 0.382 in this case is perfectly aligned with the structure. So from here, this impulse, and then you expect a retracement, and then from here you expect the next impulse to the upside, which will bring us exactly again till the -618. And as you can see to the left, you will have over here again a strong level of supply, and this is going to be the next area. Plus this level is also historical support resistance, which is strong, because it was previous also with a level of demand, then demand again for a correction, for the liquidity grab to move to the downside, and then from here, boom, strong movement to the downside. So this is from my point of view then the next target, which will be the 1.50 level. as you can see. So exactly over here, like I told you from the example with the gold, the banks likes to use raw numbers. In this case, look at this 1.50, and then from here the market dropped to the downside. So that means those levels are like a magnet, so they really would like to test that level. Always they like to test the levels, and this is why I currently expect that, because if we did not test the 1.40, we should test it right now. And right now with this movement to the downside, they are here to collect the liquidity, and this is why I was looking yesterday for a buying opportunity and not for a short one, because I really would like to see the market hitting the 1.40. Going right now to the weekly time frame, what you can see over here is that you would like to see, of course, the market testing this previous level of resistance, now turn support, but I don't expect that this will happen this week. I expect that this is going to happen then next week, so that the market, after hitting the 1.40, so let me do it a little bit like this. You got here the 1.40. I would like to see the market hitting the level of the 1.40, testing this level, giving you again a move to the upside, and then it will drop down. Okay, specifically exactly till this area over here, because this is then monthly resistance, and then afterwards I expect that the market from here will go up straight to 1.50. Okay, this is how the GBPUSD will be in the future from my point of view. Let's go to the daily time frame. The daily super impulsive since the news releases over here. So we took in the inner circle a nice buy from that level, but unfortunately we closed it again over here, because for my bias, this whole market should have reversed over here, because you got over here this rising wedge, and this is why I was expecting that the market from here will go for that deeper correction. Unfortunately, it rejected the level of demand from here, and this is why I took a buy. But I was expecting that it will provide us only a movement to the upside before dropping lower. But yeah, sometimes it doesn't happen like you wanted to see, which is part of this business. And as you can see right now, you're still in this bullish trend over here, still in this strong bullish trend. Now, yesterday the daily closed bearish, and it gave us a correction based on this last impulse lag over here. So what we know is that from here institutions took a nice buy, and right now they are taking profit. Exactly at this level they took profit, and right now what they're doing is they're looking here to re-entry this whole thing again, to go for a nice buy. So we tested again the 0.5. What we can expect is maybe a deeper test till the 0.618 or something like this, before afterwards going up higher. So overall on the daily, we're just impulsing and correcting to the downside, impulsing, correcting, impulsing, so to the upside. And what I do expect right now is another move to the upside, which will bring us then straight to the 1.40. And yeah, that would be nice. Maybe we're going to go up a little bit higher. Okay, that's definitely possible. So the 1.4070 will be also on target. So don't get me wrong, I will not execute immediately at the 1.40 shorts, because we got still the probability that the market will fake out a little bit more to the upside. Because if you have a look right now on the monthly, you will understand that this whole thing over here above is supply. So till the 1.43 you got supply. So this market could reverse at any price level within this area. Okay, and the higher the market will go, the deeper the correction will be. So I see a max of 1.4250, something like this is the maximum what I see, because then the 0.5 will be still the best level to go to the downside, and then we will have a high chance that the market will also spike until the 618 for a liquidity dive before market will go up higher. So that's kind of the thing what I see for GU. But let's see guys. Okay, so currently on the GU I'm bullish. I expect the market to go up higher. You can see over here kind of a bullish flag over here, and the market should then just continue to move up higher. But always keep in mind the market could go easily lower before going up higher. Okay, something like this. So to get a big manipulation to the downside is always the possibility in this case. But yeah, that's it. So the next one was US oil. yeah, we are here still in the monthly area of supply. So I expect from here, based on this last impulse lag, that the market should give us at least a retracement, and then afterwards to go up higher. But still, we could easily break this level of supply. As we all know, US oil is from the fundamental based bullish. Why? Because of the government and so on. Everybody, so the big mans here in the world, they own oil, okay? They have a lot of money invested in US oil, so they don't want that US oil will go back to zero like it did it in the past. It was because of the corona. It was because of Russia had some how was it I said? They had some Auseinandersetzung. Let me check it out on the translate. Sorry, guys. Yeah, confrontation. So they had some confrontation because of the oil, and this is why then everybody was dropping the prices. Okay, so I think it was Iran. I'm not sure. Two countries, so Russia and another one, they were fighting because of the price, and everything has to do with supply demand. And what they did, they dropped the price. So Russia dropped the price, and the other one dropped it again. So the overall US oil dropped crazy to the downside, because when the biggest US oil providers are dropping the prices, then the price will drop down, okay? That's normal. And this is why then US oil dropped to the downside. And it was because of the corona. So there were not so many people wanted to buy oil at that time. And this is why that was the big impact in this case. But from the fundamental base, it still should be bullish. And this was the case during this whole movement over here to the downside. This market should have been from a fundamental base bullish. But still it went to the downside. That was crazy. Right now it recovered, and we got strong bullish patterns over here over and over again. The weekly is still super bullish, daily super bullish. So you cannot look right now for a short setup. It's not possible, because this market is still just moving to the upside. And with this last impulse, I told you that I expect a retracement at least till 0.382. This is exactly what happened. Right now, what you can expect is that the market will maybe just drop down from here, or it will continue with the next impulse to the upside. So then let's check out some comments over here. So I'm late, but I'm glad to be here. You're welcome, Bradley. Euro NZD, Euro GPY, and USD GPY. Hey Darius, morning. Hope you're doing great. I'm just arriving. Yeah, bro, I'm doing good. Hopefully you're doing good as well. Not a problem that you're late. Thank you very much for your USD analysis. You're welcome. Yesterday was really tricky on Euro USD and GBPUSD. Yeah, that's right. I have witnessed manipulation in the evening. It was crazy. That's true. So I also was trapped in the manipulation because of the market was creating higher highs and higher lows, also from the lower time frame, and it also gave me the confirmation that we should go up. And this is also super important thing over here. So I also watched yesterday a YouTube video, which was very good to remind some stuff. And the thing is over here, this is super important right now, guys. This is really one of the most important stuff in the Forex market, because if you don't understand this thing, then you cannot be profitable. That's not possible. It is about the circle, the procedure of trading. Okay, so we'll now do this here blank, because I just need a circle in this case. So look at this. You would like to participate on the Forex trading market, and what you do is you are looking for a strategy. Okay, you're building your own strategy. Maybe you bought a strategy. You can buy strategies from other successful traders or so on. And what you do is you execute this for the next 1 to 3 months, and you will make profit. Okay, it will lead into profit, which is good. Okay, you're happy, you're doing profit with a strategy, you are in this time period, then you will be super happy because you make profit. Okay, that's good. You make profit when your strategy works. That's a good thing, right? So what will happen then? That's the winning period of your strategy. Later on, your strategy will not work that good, okay? And you will make some losses. Your strategy will end up giving you some losses, and you will be sad. You will just think of, okay, maybe I need to do a new strategy and so on. And this is the part where most of the traders will fail, exactly over here, because they are going to be emotional. Whenever they get emotional, they will violate rules. They will not stick to risk management. They will not stick to the rules of the strategy. Okay? They will violate a lot of stuff. Now, what should you do in a case like this? You got two options. And this is the one who will be successful, which will do those two things. They will be successful when they are going to adopt the strategy. That's one part, what you can do. Or you stick to the strategy. And if you will do this again, then you will end up again in doing profit. Okay? This is the thing. What does it mean right now with adapt the strategy or stick to the strategy? Well, if you are trading in this Forex market, you will face a losing period and you will lose. So you will lose a phase of a losing period and you will face a profit period. That means there is not a single strategy out there which will give you 100% win rate. It's not possible. It's not possible. 100% win rate you will only have if you are one of those 7 banks. One of those 4 to 7 banks. Then you will have this result. Because they are risking the whole liquidity for their trades. And if they will lose that money, then they will make 0%. They will make 0%. And that's not possible because they have so much liquidity. They are controlling this market. They are those who are providing us the uptrend and downtrend structure. Okay? So, this is, for us retail traders, this is not possible. Okay, so don't focus on having 100% win rate on your strategy. That's not possible. But maybe your strategy is one who has a high win rate, but therefore you will not have a big percentage win. Why? Because your risk reward will not be the best. And this is why you need then to find for yourself which strategy works the best. But what every strategy will have is a profit period and a losing period. So sometimes that strategy will not work that best. And this is what you need to figure out from backtesting your strategy. So if you backtested your strategy over the last couple of years, so over the last 2 or 3 years, for example, then you will need to find out that maybe 1 or 2 months will not work that well. Maybe you will be still in profit or in small loss. Something like this is always been the case, okay? And at this point, they will be so emotional, most of the traders, and they will just violate the rules. They will not stick to risk management. They will do some other stuff. They are trying new strategies and stuff like this. But what you need to do in a stage like this, if your strategy is backtested and you know, okay, there will be some weeks where I will not be 100% profitable, then stick to it. Okay, you're happy with the strategy, stick to it. But if you're not happy anymore because that strategy is not the strategy that you like to follow, so you see right now too much losses or stuff like this, then you need to adapt it or to take a new strategy. Okay, then your strategy probably is not good. This is the phase where you will understand if the strategy is really good or not. But if it will be just a stage, okay, only for a couple of weeks, then stick to it. And this is exactly like it is a part of my strategy as well. Also me, for example, in the November, on my personal trading account, I had a win rate of 100%, okay? I won every single trade. Every single trade headed my take profit or my stop loss on entry. That's the two options that I had. I never had a stop loss hit. Never. Okay, that was crazy. So I was just happy. I thought, okay, oh my God, I got the best strategy out there. And I was a little bit convinced, okay, 100%. The next month, I didn't have that 100% anymore. I had to take some losses, okay, which is part of the game. Then January was even better than December again. February is a little bit mixed up, okay? Sometimes loss, sometimes wins, sometimes loss, sometimes that's part of this routine, and we need to be aware of that, and we need to accept that. And at the moment when you're going to get emotional, oh my God, it's not working. But also, if you are, for example, trading with a strategy of a successful trader, maybe you will doubt his skills at that moment. You think, oh my God, that trade is not good. So a lot of traders are going to go down to his post and say, you're not a good trader and stuff like this. Bro, that's not the thing. His strategies may be good, but the stage currently of his strategy is currently in loss, because it's part of this business that not every strategy can be 100%, because if that will be the case, then you will distribute the strategy to everybody and everybody could make millions of millions. That cannot be possible, okay? Okay, I hope that you understand this thing over here. I will also this one download, because this is super important. This is super important stuff, and really you need to acknowledge this thing over here. So I need to just quickly download it over here. That's important. Okay, guys. Then I would like to continue with the next pairs. So I don't know right now which one is the next one. So let me just check out the comment section. I think the next one was from Sava. I think you or somebody cut CHF something like this was the next one. Where is it? Cannot find it anymore. Okay, no. Then I can't find it anymore. Oh yeah, CHF JPY. Sorry, CHF JPY is going to be the next one, and then I will continue with the other ones. So that was one which I already analyzed recently. Like I see, yeah, look at this. CHF JPY is in a bullish environment. Why? I know we are facing here resistance, but we are impulsing, correcting to the upside. What do you expect right now is that the market will just go up higher, okay? Based on this last impulse, we may see at this level maybe a retracement till this level of support over here before going up higher. That's one probability. On the weekly, we had a perfectly correction followed by a movement to the upside. And afterwards, the market should go up higher. Okay, so it looks, from my point of view, super bullish. However, right now you should not look for a buying opportunity. Right now you should look for a correction based on this last impulse, going down lower before moving up crazy to the upside. That's going to be the next movement. The next one will be Euro and ZD, guys. So Euro and ZD, sorry, I need to tap in something. So Euro and ZD was the next one. Yeah, like I told you, it's not a pair that I trade. So from my point of view, right now still in a bearish environment, and that was the two options which I discussed yesterday, and the market really went up higher. Currently, the next area where you should expect the market to reverse is the supply area. So we already tapped into it right now. Again, traded from zone to zone, Sava. Like I told you, I'm not an expert in this pair, so this is why I can't give you right now the best advice. Right now, I feel this whole thing is kind of a correction. Looks like this from my point of view. Maybe we broke out. I don't know how to draw this correctly. This pair, I don't like this pair. Really, I don't like this pair currently. It's not offering right now for me the best opportunities. Only what I like on this pair is to go for a nice short. okay, from that one. So on the smaller time frames, looking for a sniper entry to go to the downside. That's what you can do on the Euro NZD for sure. Currently here, the 1 hour is bullish. We broke structure. Maybe we're going to continue to move up higher, but maybe we're going to drop down from that one. Maybe we're currently preparing here, look at this, to move up higher from here. Okay. Euro GPY we already discussed yesterday. Look at this, it went up higher. Wait for a correction to the downside on the Euro GPY. Okay, wait for the correction to the downside. Look here on the daily time frame. We closed bullish. We got a W formation just behind over here. The market should give you, based on this impulse right now, at least a retracement. Let me drag the fib level over here. So how far? I expected at least till 0.32. But more than likely, it looks like we're going to face a 0.5 or even a 0.618 before the market then will continue to move up even higher. Okay, so this market, the Euro GPY, is definitely crazy bullish. Okay, so definitely crazy bullish. The next one was USD JPY. This pair is also fundamental based super bullish. However, we need to acknowledge that the dollar is weak, so this market will then go more than likely slow to the upside. What I do expect from this break of this area of supply right now is that the market will just keep pushing up higher. So right now I'm bullish on this pair. Yeah, just go up. Maybe it will go down later on to test the level before going up higher again. So what you do is focus on potential retracements to buy that market again. Don't look right now to sell it. That's not a good idea. Okay, then Nasdaq. Yeah, Nash has a good potential to go down lower. I don't know right now at what point I made that analysis, but the market had tapped into that level over here and it went bullish. This is definitely the expectation because this market is overall super bullish and it just needs to go up higher. Okay, that's definitely possible. This market should just keep pushing. Look at this. But because of this trend line, most liquidity is built on below this area. That means the market has a high chance to suddenly give us a movement over here to the downside, to test some support levels over here and then to go up higher. Something like this is what I expect on the Nash. Okay. However, I entered against short position yesterday. I will close everything before 2:30 because USD has critical news today. Yeah, I think that US news will be super bad for the dollar, so that the dollar will go crazy to the downside. I think we should drop a little bit during the London sanctions and move up during the US. Just my personal analysis. Yes, completely agree with you. Yeah, AJ Wares also agrees with you. It looks like it's not dropping right now. On a 30-minute, I see 2 bounds. Okay, I hope it will correct a little bit further down, but as Darius said, this correction and then be bullish to 1.40. Yes, exactly. About 100 pips away, not too far, and then short from around there. Yes, exactly. There is a little rejection on GU and the 30-minute time frame, but I do believe we might drop until 1.3850. Yes, this is also what I see, something like this. Okay, great guys. I think that we covered up right now every single pair. Do you have any other questions or any other pairs that you want me to cover up for you? So we're approaching right now the end of the live stream, so right now you have the last chances to ask some questions or to send me a pair that you want me to cover up. All in all, this live stream right now was very educational, so maybe you will check it later on again just to map out that important thing with the strategy, that important thing with the financial institutions, with those big banks who don't need to do chart technical analysis. Why? Because they just buy depending on the numbers that you have over here on your right side, and what they do is they buy the low, they sell the high. That's it. That's the most common strategy out here. But for us retail traders, we need to map out perfectly the area from which the market will really return so that we can make the much best high risk reward, and that's the only thing how we can be at the end of the year or the month, we can be then profitable, because we cannot control this market. So whenever we are going to go a buy over here, this market doesn't need to go to the upside if we don't have that liquidity. Okay, so we need to use the liquidity of the big hedge funds, of the big banks. Okay, so we need to see on the charts where they have their entries, and we're going to simply just follow them. That's it. Okay, just please look this live stream maybe again if you didn't understand this concept, and yeah, please leave a like if you like this live stream. That was super educational. This is stuff which you will not get in some courses. Okay, so I've seen there so many courses out there where people are selling it for $5,000 or stuff like this, and what they teach is simply retail things like wait for support resistance flips and stuff like this. Now just keep in mind, I just look on those courses and I just think of, oh my god, really they are selling stuff like this? That's really unbelievable. So don't listen to people who are telling you stuff like this. Okay guys, then thank you for your attention, and we're going to see Dan next time with a new live stream. I'm not sure if we're going to do tomorrow one. I'm not 100% sure right now, but definitely a new YouTube video will be then released. If not, I will notify you on Telegram, so stay tuned guys. Okay, see you. Bye bye.